If you're new here, welcome to the Coffee and Crypto team. When everything feels bearish, usually rallies come after. When everything feels bullish, usually crashes follow shortly after.
Amen.
The levels I'm watching are, first of all, that 17,600.
If you're listening to the sound of my voice, that can mean only one thing, and that's that you are in the market pulse, baby. Let's do it. The merge has shipped.
Come on, baby.
Yeah.
Come on now.
That is the date that the Federal Reserve will be making their Fed rate decision.
Well, gee, Tim, I would love to do that. I think we're still going to see projects like Bored Ape Yacht Clubs or things like that still exist. The answer is 1,000 Dogecoin.
Oh.
Good morning, everybody. Welcome to Coffee and Crypto Live. It is Wednesday, October 5th of 2022. I am smiling right now because T-Shroom left just a little bit ago, said he'll be right back, and the show is now on, and he is not back.
He's not back.
So I don't know if Shroom's going to be on the show. He's going to be on the show today. He's just going to walk in late here. It's going to be a fun one. But, you know, it wouldn't be a Coffee and Crypto show if there wasn't some kind of shenanigans going on behind the scenes. Keeping it running today. Will Tim mess up the flow of the show? That is the ongoing bet. We're constantly wondering. 2 days ago, I definitely messed up the intro. I nailed the intro yesterday and then messed up the middle. We will see if I can keep it all together today. We got a great show lined up for you guys. Caleb Franzen will be joining the show to discuss what the Fed's initiative is going to look like. Oh, there he goes. T-Shroom's back in during the set. Anyway, we're going to be talking about what the Fed is going to be doing in light of all of these global economic crises that are coming. We see what's happening in Europe. We've heard some stuff happening in Russia. Of course, there's still the stuff happening in China and Taiwan. Will the Fed potentially be forced to make a pivot on their current strategy, or will they continue on and there could be absolutely disastrous global economic situations because of that? We also have news that Elon Musk, after having an on-again, off-again relationship with Twitter, does look like he is going through with the purchase. What does that mean for social media as a whole? Thank the Lord, more than likely the bots on Twitter will be gone. That's going to be amazing. Last piece of information we will discuss in the Market Pulse will be that we just saw the all-time high hash rate happen on Bitcoin, despite the fact that the price is very, very low still. We will have to see what that means for the future of Bitcoin. Make sure you stick around for the entire show. Very interesting stuff. I think there's another new segment. We're going to be doing something at the beginning of the show that you have to wait till the end to see how it plays out. But before I get into the details of that, first, go ahead and smash that like button and subscribe for more content just like this. I'm going to introduce my co-host back from his trip. I got T-Shroom over here to my right. How you doing this morning, T-Shroom?
Very relieved.
Hey.
Very relieved to be here on time.
Yeah.
Nice.
I got
on
Smay over here to my left running the tech. How you doing, Smay?
I think T-Shroom used the word on time a little liberally there. So we're going to have to talk about that after the show. But I'm doing great, Tim. Tim, you look great today, I have to say.
You know, I do the best I can. Loving my new house, dude. It's actually really nice. Like, it's a little too big for probably just me and Taylor at the moment, but we have it there for, you know, any future children necessarily, or even if we have guests over.
Or a future
So I'm loving future Smay, yes, because you know, I mean, Smay's like a child to me. That's why
house Smay.
Sometimes I have to discipline him on
All
the
right,
show.
T-Shroom, I don't like the direction you were taking that. It was more so that I would be like Tim's adopted son, and
It's true.
And you made it sound like I'd be his house elf, and that's inappropriate.
It's true. I don't know why you left it on me for
Smay
the
does have
entirety of that
house elf
conversation.
vibes, though.
What?
I wouldn't mind having
I didn't leave it on you,
a
Tim.
house Smay.
You did.
Tim, I need you to stop criticizing.
You act
the
like
way
I can't
direct.
see this new setup, Smay. I can see what you are doing.
I'm gonna
now.
need you to not criticize the way.
All right. Well, you know
But
what,
look-
Smay? Before we jump into this, I saw a comment yesterday in one of the videos that said that Tim needs to stop being aggressive towards Smay. And here's the thing. It's not fair because he baits me so. You guys will never know the little chuckles he has behind the scenes when he's able to bait Tim into a good old riff. So I'm going to do the best I can not to go after him, but I want you guys to start paying attention for the times that he starts baiting me and going after me, and then we'll talk about who the bully is in the room. With that said, Smay, you have a job to do, and that is the reading of the green names. Take it away.
Yes, I am so glappy. Glappy.
You're glappy.
That's a new word. I'm glad and happy at the same
I
time.
love creation of new words.
Oh,
Good for you,
guys,
Smay.
by the way, I have a new look going. I have here a mic that now I'm mobile. Look, it sounds just the same. I'm down here. I'm up here. I'm over here. I'm over here. Look, I sound the same. That's great. I love it.
Where'd you get those headphones?
T-Shroom provided them. Brought to you by T-Shroom. Also, I'm wearing blue blocker glasses so I can read the green names a little easier so my eyes aren't straining. So I did that for you guys. So let's see if I can get through these green names a lot more efficiently and I can read better. All right, so here we go. We'll begin. We have Crypto Mini by Green Names, Tyler Main, Adam Rourke, GoGo CJC, Green Names, woo, Mitch Shaw. Who else I got here? Brad Geidel. We have It's 420 Wood. We have some blue names. We have Matt C. We have CryptoSec Guy. We got the Coin Father. We got Justin Eubanks and Agent Gold and so much more. I love all of you guys. Josh Denham. I love all of you guys, including Grandeur Incorporated and Colin McDonald and Amelo Fellow. I love all of you guys. Back to you, Tim.
We just got a membership chat from Dr. Fuzzy Eyeball. We'll read it now because otherwise it will not be relevant. He said the only reason I have a membership is to watch Tim and Smay battle. Yeah, this gets even more intense if you go to some of those membership streams.
That's right.
It's a good reason to join. We're about to do something very different. Before we transition into our market pulse, we're going to be as quick with this as possible. But one of the new segments we want to do is once a week have a game where we have kind of like almost like a betting odds, like an over-under. And so today, I believe, Smay, we're going to be doing 3 coins, and we're going to decide what we want our points to be, and we will continue to move those points until T-Shroom and I have split, and one of us is the over, one of us is the under, and then Smay will get to jump in with his. So, Smay, what are the 3 coins we're doing today? Let's start with the first one.
Well, I love the fact that you asked me that question, guys. The coins today that we will be predicting by the end of the show are as follows. Bitcoin, XRP, and Polkadot.
Gotcha.
You know I love those coins. They are good coins. Tim, do you love those coins?
I do. I do love all 3 of those coins,
Do you feel confident in your predicting skills today? You did lose the last game, so you're going to have to step it up.
It is hard because what we're talking about is what it's going to look like in about an hour and a half from now. And, it's hard to pinpoint that, but I'm going to give it the best I got. Let me go ahead and read the prices, and T-Shroom, you and I will start off the bidding. Right now, Bitcoin is sitting at 19,861. Do you want the over or under on that?
I'll take the under.
I'll take the over. So that's perfect. 19.8. Let's see. Do I say 61? 19.861. Let's make a note of that. Smay. So Bitcoin.
19.861.
Smay, what do you got? What do you got? You got the over or the under?
I'm gonna take the under.
You got under, so it's me against you two. All right, good to know.
Yes.
Good to know. Good to know. Let's go XRP. Currently, XRP is sitting at 40.
Real quick, give me that starting price on Bitcoin again.
19,861.
19,861.
Yes, and I have it written down here too.
All right, perfect. Next,
XRP, 47.8 cents.
All right.
T-Shroom, what do you want? Over or under?
I'm going to take the under.
He's taking the under.
You know what? I'll take the over. I'll take the over.
I'm going to take the under.
The last one you said was DOT. DOT is currently sitting at $6.29.
$6.29.
Over or under?
I'm going to take...
Well, no, hold on. T-Shroom's got it.
Oh.
T-Shroom, over or under on DOT?
T-Shroom, over, under on DOT.
$6.29.
I'm going to go over.
I'm going to go over as well, so we got to keep moving up. What about $6.30?
Over.
All right, let's go $6.33.
$6.33, over.
Wow, you think of bullish when I was going there.
Bullish,
I'll take the... no, I'll keep going over. $6.38.
Under.
638.
I don't know. 630. Let's go 637.
Under.
630. I'm gonna go under on that one. 630. Actually, you want an over on 635?
Sure.
I'll go under on that one.
All right, so 635.
635.
635. And Tim, you might be wondering, what am I gonna take?
Yeah, what are you gonna take?
The under.
Really? Okay, so you're with me on one of them.
Yes.
All right, let us know in chat what you guys think about those.
You took over on Polkadot. Why
I
am
took under on Polkadot.
Oh, but
I took the
T-Shroom
over on Bitcoin and XRP, and then I took the under on DOT.
T-Shroom
So-
just took the under as well.
No, he took the over on DOT.
T-Shroom, did you take the over on DOT?
Yeah, at the final price.
Yeah, 635.
I heard under, but all right,
Yeah.
that's fair. So me and Tim were together on Polkadot.
Let us know in chat what you guys think on those prices. Smay, if you want to at some point put those in there as well.
I did.
Randomly. In the
In the chat.
well,
I
you
will.
can do like a poll on it as well.
I can do that.
Yeah, we can do that. We're about to transition into our market pulse for this morning. It's going to be a really good one. But first of all, our market pulse is brought to you guys today by the jacket that is on SME, and that is Hedge. It is a phenomenal company helping you guys be paid in crypto. That's something that a lot of you guys want to do, but your jobs don't necessarily offer it. Hedge allows you to do so by getting your direct deposit from your workplace set up to pay you at least partially in cryptocurrency, whether it be Bitcoin, Ethereum, Litecoin, whatever you want. Save yourself some exchange fees. Go sign up with Hedge today with our link down below. You do not want to miss out. If you have not done that already, I guarantee you're going to like doing that, especially with these low prices in crypto. I know, some people think we're still going lower, and we absolutely could. But when the grand scheme of things are played out, these are very low prices. You're going to be very glad you were accumulating and DCAing in, and the best way to do that is to be paid in crypto. That being said, T-Shroom, let's go ahead and jump into our market pulse.
Ladies and gentlemen, if you're listening to the sound of my voice, it can mean only one thing, and that is that you are in the market pulse, baby. Let's do it. Starting off on my screen on the Fear and Greed Index, we have come a long way out of still in extreme fear, but getting towards the outskirts of extreme fear here at 25. Yesterday was 20. The week before was also 20, but last month was 23, so we turned it down, and now we're peaking back up, making a new high out of extreme fear. Hopefully, still not out of it, though, yet, back into fear. We're still in extreme fear. Moving on to the CME Fed Decision Predictor Tool. That has now continued to gain steam in the same direction it picked up yesterday at 68% likelihood of a 75 basis point hike on November 2nd, and that is pretty bearish, I'd say, overall, but we'll see if the market can potentially react differently from the last few 75 basis point hikes. Then we should see this could potentially be a bullish. The bullish narrative is that 75 is the new 25. I don't know that I'm super convinced that the market believes that yet, but that narrative could absolutely go ahead and take over here on this next November 2nd Fed decision. Moving on into the stories, Bitcoin hash rate crosses 300 estimated hashes per second to create new all-time high. Take a look at this. If you don't know, on one hand, a rising hash rate indicates that the network is becoming more secure. But on the other hand, it puts pressure on miner profitability numbers. So it's good for security, and it creates more competition for miners, so miners get a marginally less payout with each increment that this goes up, with each hash per second increase. And you can see all the way back to the inception of Bitcoin in 2009, you can see that this is quite an increase. This is the hash rate. This doesn't really correlate directly with price. And you can see that right here we have indeed crossed over 300, and we're right now at 311. So this means a lot to miners. It probably doesn't mean a ton to you back at home, but all it means is that miners are continuing to mine. That mine rate, it does ebb and flow. You can see here it does go up and down. It's not a constant steady line upward. But from its inception, this absolutely has shown that there is a lot of interest in mining Bitcoin, and that is not going away as that hash rate does continue to go higher. Moving on, Bitcoin accumulation hits 7-year high, flashing 2015 and 19 bottoming signal, says a quant analyst. So taking a look at that, you can see here, this chart, it's 74%. In 2015, it was 77. In 2019, it was 70%. Now, again, it is 74%. So kind of reaching those levels. You could say that we've been in this since we went above 70%, because that was the range between 2019 and 2015 that we needed to hit. But now we are squarely in that range and going higher, about to tickle 77%. Over 6-month-old Bitcoins take 74% of the realized cap, which means over 6-month-old unmoved Bitcoins take 74% of market cap in terms of P&L realization. So it's not just overall market cap, it's P&L realization of the market cap. The firm also says that the number of Bitcoin addresses holding 0.1 coins just reached an all-time high of 3,832,859 on Monday. So moving in the right direction here, folks. Hopefully this should translate as a little bit of hopium for you. just to continue to hold through this difficult bear market. Obviously, the macro headwinds, as we're going to be discussing with Caleb later, are, you know, really the ones to be paying attention to. But here is a signal of hope, and we always love to see those here in the Market Pulse. Moving along. It wouldn't be crypto without Elon Musk, of course, and Elon Musk proposes to proceed with a Twitter acquisition. If you've been following the story closely, then you'll be very interested in this. Tesla CEO Elon Musk has proposed moving forward with his on-again, off-again agreement to buy Twitter at the originally agreed-upon price of $44 billion, or $54.20 per share. You'll remember that clever little shout-out to 420 there in his pricing. That was big news at the time. According to the letter from Musk's attorneys to Twitter's lawyers, that was also filed with the SEC. So all that according to a lawyer, so it's legit, it's official. The letter also requested an immediate stay of the lawsuit Twitter had filed against Musk. And in a tweet from Twitter's investor relations on Tuesday afternoon, the company said they had received the letter from Musk to buy at $54.20 per share. So things moving forward there. To be honest, I wasn't expecting that. Tim, did you have any thoughts on whether or not Elon was going to go ahead with this deal?
I read something the other day that says that this is part of his initiative for futures with Project X. Like he says that this is kind of essential for it. So I think it's just a lot of him thinking about it, trying to play hardball with Twitter. But at the end of the day, he went back to the drawing board and said, I want it, I need it. I'll go ahead and just fork up the money and fix all the problems myself and still be profitable, because that's what Elon does.
Yeah, well, Twitter, the stock was up on the story on this headline, and also Dogecoin was up on this headline. So, what this does is it puts back into play the narrative of Twitter being underpinned by a blockchain. And what blockchain that might be, we don't know yet. I would assume that Ethereum's probably a top contender, Polygon more than likely a top contender, but it could be any of them, could be Doge. So, but moving along. The EU seals text of landmark crypto law MiCA fund transfer rules. This one is pretty big, especially if you live in the EU. The EU made a pretty big decision yesterday. I don't know if anybody saw it, where iPhones now have to be C-type USB. So the EU is in a session right now. They're passing laws left and right. This one has not yet been passed, though. Let me just say it has been sealed. So that's sealed to the text, meaning there can't be any more revisions to it. MiCA introduces the first ever licensing regime for crypto wallets and exchanges to operate across the bloc, meaning the EU, and impose reserve requirements on stablecoins that are intended to avoid Terra-style collapses. A separate law on fund transfers require wallet providers to check their customer's identity in a bid to cut money laundering. So that is a separate bill with the know your customer aspect there. Industry lobbyists were hopeful that they could still clarify measures in MiCA that they feared could limit the trading of U.S. dollar-denominated stablecoins. Okay, but France was keen to avoid incursions into the sovereign role of the euro. So it looks like they are going to move ahead with potentially with laws that could make it some more difficult to trade in the U.S.-denominated stablecoins. The text must also be formally agreed on by lawmakers at the European Parliament and is expected to be gazetted, I think that's the word for passed, in the EU's official journal in the next part of early next year, but it will apply to 2024. So this is a long-term occurrence. It's pretty big news here. Is it bullish or bearish? Well, industry offers cautious welcome to EU's landmark crypto law, MiCA, and I was briefed on this bill. It looks like it is going to be bullish for crypto because it does provide regulatory clarity in the EU. I see this as kind of this is a little bit of a copycat of the legislation that passed in New York that then was the similar legislation was vetoed in California, and it looks like the EU is adopting that from here. So that is going to pretty much conclude our market pulse. One more headline here. Coinbase incorporates in Australia, expands offering for retail customers, and the NASDAQ is not going to be releasing their exchange yet, says their VP. So NASDAQ needs clearer regulation to launch crypto exchange VP. But that is going to wrap up our market pulse. I'm T. Shroom. You can find me on Twitter and Instagram at T. Shroom. Would love to engage with you further there about these stories and much more in crypto. Tim?
Boom.
Take
Thank
it
you
away.
so much. Thank you so much there, T-Shroom. That was our market pulse. We're about to jump in and do a little bit of technical analysis. Those of you who follow me on Twitter, real quick, go to my screen here. I put a tweet out last night that said, what all coins do you guys want to see me do on TA tomorrow morning? Coffee and Crypto live show. Comment below, and the 3 with the most likes will be the winners. I went in and tallied them up. I'm going to save these until the community portion. I know we're going to have time to do them in the community portion, but just so you guys know, and you can start engaging with me over on Twitter to get your say in on what these coins are going to be. The 3 that had the most votes when going through and looking at people's requests and then looking at what people liked were Matic, Algo, and Crow. So stay tuned at around 11:10, 11:15. I will be doing some technical analysis on Matic, Algo, and Crow. They did get the most votes for today. Make sure you guys get your input in so that I can do technical analysis on all the coins that you guys love. With that said, though, I do want to focus a little more today on some bigger coins, but before I even look at coins, I want to look at the Dixie and explain what is going on there. So go back to my screen here, Smay. Let me kind of broaden this back up. I'm looking at the Fibonacci this morning. Let me go down to the 4-hourly chart. Makes it a little more clear. After falling for multiple days now on the Dixie, it does look like we found support. And what's cool about this level of support, when I say cool, I mean just from a technical standpoint, not cool for the price of Bitcoin and other cryptos. This level served as a resistance level several times within the last couple of weeks. So if you're going back here in September, we rejected on it back here on the 5th. Yes, we broke through it over on the 7th, but then falling back below it, we tested again the 8th. We did it again on the 13th. On the 16th, and once again on the 19th. Now, this form of resistance is turned into support. Is there a chance that we continue to fall on the Dixie? Absolutely there is, but for right now, it does look like form of resistance has been turned into support, and some levels to keep an eye on. The Dixie is climbing even this morning, so if you guys are wondering what is the catalyst for some of the drops, some of the red candles on cryptocurrencies like Bitcoin and Ethereum and Cardano and others, it's the Dixie is rallying this morning. So let's keep our eyes on what happened here. At the 0.382 level, you guys are going to see that we actually have a level right there on 111.88. That is something I'm going to keep my eyes on. And the reason why, you guys who have been in office hours over on Club DeFi with me know it's normal when something is falling for it to retrace. That's the whole purpose of using Fibonacci retracement. It's normal for something that's rallying to come down a little bit. What we're looking at here is it is okay for us to rally back up. During a fall, even with the bears having control, or in this case, the bulls and equities with having control, it is normal for us to rally back up to the 2.36 or maybe even the 0.382 level. Getting up to the 0.5 level, like if we were to come all the way back up to 112, now we're starting to get to a place of saying, all right, the bulls in Bitcoin or the bears in the Dixie, they do not have as much control as they did. Then when you start talking about the golden pocket, now you're starting to get to levels of like, oh, okay, well, no, the bulls gathered more momentum than they thought. So right now, there's nothing telling us that this downtrend on the Dixie is over, but if we start to break up and head back towards 0.5 or the golden pocket, that's when the narrative could shift to say, okay, is this little rally that we had in Bitcoin over for now, and it's actually time for Bitcoin to fall back? So of course the Dixie is inverted to Bitcoin. Let's go look at that right now. That's, by the way, one of the reasons why I took the over on Bitcoin. I thought we could drop a little bit more, but I'm expecting potentially there to be a little bit of a catch here on Bitcoin, and it rallies over the next hour and a half. Not saying we can't go down lower. You guys are going to see on Bitcoin, we did, in fact, actually hit our heads on the top of that zone I marked out for us here a couple of days ago in this ascending triangle. We have a wick that went above, but ultimately we could not close above 20,383 on the 4-hourly chart. We didn't do it on the daily chart either. We closed out right there below that level, but I'm going to stay on the 4-hourly to make this more clear. We're heading back down now. The question is, do we return to this ascending zone of support, in which case we have a little bit more of a ways to go? We could see ourselves hit this zone around lower $19,000 levels, or are there marks that we potentially could hit before even that? So let's look at the Fibonacci on Bitcoin going down to the bottom we had back here on the 2nd of October. Right now, there's a chance that we could find ourselves within the next, the next day or so, some change, find support around 19,790 at the 0.5 level. Again, that would kind of go a little more hand in hand with the Dixie, maybe making its way back towards its 0.5 level. Let's keep an eye on that. Hopefully we can find some support around 0.382, and Bitcoin can find some support even right now and start to rally back up. But that is the first thing we're looking at. Can the bulls regain some control by holding this 0.5 level at 19,700, give or take, or are they going to give up and potentially allow us to come down to the golden pocket, or even worse, potentially down to the 0.786? Make sure you guys are keeping your eyes on that. We're going to be talking with Caleb Franzen about sentiment as to why Bitcoin still has some bullish outlook short term, but super short term, meaning the next couple of hours and days, it does look like this retracement after a nice little rally is in effect. Let's check out what Luxalgo is doing, because I was playing around with some Luxalgo settings the other day. I know a lot of you guys own Luxalgo, or you guys have been asking, what is your thoughts about Luxalgo? Tim, Bitcoin actually played out very perfectly, coming up and hitting our take profit on the 4-hourly chart that we got a buy order on here just a couple of days ago. But in case anyone's wondering, I've seen this asked a lot, Tim, what are some settings that should be used? I was actually exploring some videos, and I began to play with this setting right here. This might be one of the most important settings for you to go in and manipulate, and it's the signal sensitivity. Originally, I think the default is going to give you 12, right? So if you were to give the 12 on the sensitivity, you're going to have a lot of buy and sell signals. And I know those who have learned how to use Luxalgo know you don't just respond to buy and sell signals. You're waiting for confirmations. But when your sensitivity is low, you're going to get a lot of them, and this can be very confusing. Unless you plan on being a super, in and out trader, a scout trader, getting in and out of trades multiple times a day, I highly recommend you guys go to the settings on Luxalgo, raise that sensitivity to at least 30, if not 40 or 50. I'm going to go with 40 to show you guys. This is going to take a lot of signals away from me. There we go. Did I not get it? Boom. Come on.
You got this.
Why is it not? Okay, I just typed it in. It's going to, let me just change this back to none.
You got this, Tim.
You got it.
Come on now. Maybe I just have to refresh my page. There we go. I got it. There we go. So this takes a lot of signals away from you so that you can focus on making sure you're making the right calls at any moment. On the daily chart, Luxalgo, that gave me a little bit of a little tease right there. The take profit, I know in other times when I had more sensitivity on, the take profit had levels starting out closer to about 15,000. Now it looks like Luxalgo, when you're looking at a less sensitive space, is actually saying potentially a take profit level we already hit was in fact around 18,200. So potentially, are we waiting on a buy signal coming on the daily chart on Bitcoin within the next week that could give us a higher prediction? This would go in line with a lot of sentiment and things we've seen on the charts that we discussed the other day with Kagan, or known as Magic Internet Money, and we're watching as the news unfolds from Europe that potentially we could have a massive, massive crisis on hand that would force the Fed to actually start to back off of quantitative tightening and go back to quantitative easing, printing money, in which case equities and crypto would get a little bit of a boost. This is something to keep your eyes on, but for right now on the technicals, you guys, I highly recommend you guys have taken some profit right here, but don't give up hope on this prediction we have here of 22,300. At the worst, I'm looking at potentially Bitcoin just comes back down to lower $19,000 levels to retest ascending support. It's still an ascending triangle that plays out the exact same prediction, and that is back up here at 22,000. That is what I have on Bitcoin. Let's really quickly check out and seeing what's happening on Ethereum and Cardano, and then we'll move on. Same thing happening over here on Ethereum, where we rejected at that descending level of resistance in a symmetrical triangle pattern. We talked about this yesterday, how normally symmetrical triangle patterns that have a descending price level coming into it, they usually break bearish, but we also know that the market as a whole likes to move in tandem with Bitcoin. So therefore, I'm still holding out that we think that Ethereum is going to be breaking bullish here, and that ascending or descending level of resistance on a longer time frame trading channel, a falling trading channel, still looks like a very good spot to predict that Ethereum could make its way back up above 15,000. So let's continue to watch that on Ethereum. Does Ethereum have to come all the way back down to ascending level of support, or will it actually rally somewhere here in the middle and begin to break out as well? Cardano kind of sitting in a similar spot where we broke through the first level of descending resistance, but we could not get through that top level of the zone. We're heading back down into it, but once again, just like Bitcoin and Ethereum, we could be finding support here very soon. I'm still holding that this prediction shooting closer to 49 cents off this breakout is well within the card. So anyone who's watching the red candles this morning and saying, uh-oh, does this mean that we're heading back down and setting new lows? No, this is a part of what happens with rallies, and if you're paying attention to the charts and you're keeping emotions out of it, there's still a lot of hope that bullish momentum is coming. Continue to watch those charts, continue to trade, but don't just FUD out because you see a couple of red candles. That's going to conclude the technical analysis for this portion, but make sure you stay tuned when we cover those altcoins later on in the show. But the first thing, I think he's in here now. I want to go ahead and introduce our guest for today, and it is Wednesday. Wednesday, so you guys know who it is. It is Caleb Franzen.
Ba-ba-ba-ba.
Oh, I thought you were going to interrupt me. What is going on, Caleb? How are you doing today?
What's good, guys? Great to be here. Love coming on every Wednesday with you guys, chatting markets, chatting Bitcoin. So super stoked to be here.
Yeah, man, I got a lot of stuff to talk about here. Again, I'm going to pick your brain because I have a sneaky suspicion you actually might be on the opposite side of me, but we're going to wrestle with this over the next half hour. But before we get to that, we've got to do the second most important thing of the show now, and that is the question of the day. I'm not going to forget it. T-Shroom, what is our question for today?
The question of the day is, would you rather have the most Masters wins or be the holder of the world's most Michelin stars?
So, teacher, I'm going to need you to tell me what that means to have the most Masters wins.
Oh, well, if you go to my screen, I will show you. So
right.
perhaps
I'd love
you've heard
to
of
do
these
that.
names, Jack Nicklaus or Tiger Woods
That's the only one I know.
or Arnold Palmer. So Jack Nicklaus currently has 6, Tiger Woods has 5, Arnold Palmer had 4, right? Or Michelin stars, of which Joël Robuchon has 31 stars, okay? Alan Duchassis has 21 stars, and there you are, Gordon Ramsay has 16 stars. So I'm going to ask the question once again, and you can leave my screen now, Smay. Would you rather have the most Masters wins or be the holder of the world's most Michelin stars? Go ahead. I want to start with Caleb.
Man, this one's tough because I'm neither a golfer nor a cook, and I would love to be both.
Perfect. We pegged you perfectly.
Which one would I rather be known for? I think I'd rather go for the Michelin stars because owning a restaurant would be super, super stressful. But the fact that you could be able to cook for people, for guests, I've always liked hospitality. So that could be kind of interesting. So I'm going to go for the Michelin stars.
Great answer. Tim, what you got?
Let me start off by saying, I said this before the show, I'll say it during the show. This, to me, is the most underwhelming question we've had a question today because I'm going to be honest with you guys. I don't eat out a lot. I didn't know what Michelin stars signified. So when he said this originally, I was like, I have no idea what you're even asking me.
I don't think any of us have eaten at a Michelin star restaurant, so I don't think that qualifies you to know what that is or not.
Can you guys please take note that it was Tim's turn to speak and Smay decided to speak instead? That is what we call bullying and interrupting. That was not me.
Oh,
that was
come
Smay.
on. Come on.
Can I speak now, Smay?
Yeah, you may.
Okay, so my answer on this has nothing to do with cooking because to own and get the most Michelin stars does not mean you are the best cook. It means you had a lot of money to invest in a restaurant and you hired a good cook. So that to me is not really that big of a deal. I suck at golf, but I would love to get better at it. It is one of the best games out there if you want to get to know people and make business deals get done. I would love to be a phenomenal golfer, so it's really easy for me. I'm going sports. I'm going to win the Masters.
Smay?
Oh, wow. Yeah, so my answer here is
So now what I want to talk about during Smay's take on this answer.
So Tim, do that again real quick. Do it again.
You just do it. You do whatever.
No,
you
do it
want.
again real quick. I dare you.
Cooking or golfing, Smay?
Let's just get through this.
All right, so and there you go. I muted Tim real quick. So what I'm going to do is go ahead and give my take.
No.
So my take here is that I'll unmute Tim just so he doesn't feel bad. All right, so guys, I'm going to choose Michelin Chef because here's the thing that is extremely valuable about being Michelin Chef is that I can cook for myself, right? So like I can be one of the best chefs in the world. That would be an amazing skill to have. Being a good golfer does nothing for me. It just does everything for everyone else that everyone thinks I'm a good golfer. Being a great chef means I get to enjoy the fruits of my own labor. So I'm definitely going to choose Michelin Chef, not only because I get to eat great food every day, but also because I'm going to be filthy rich owning a ton of very successful restaurants. I choose Michelin Chef.
Excellent.
Nice.
Love it.
What about you, T-Shroom?
I would also do Michelin Chef.
Boom.
Yeah, I think it's
3-1. Let's go, baby.
I think Gordon Ramsay is cooler than Tiger Woods. So that's my reasoning.
That's true.
Again, nothing about having the most Michelin stars means that you're the chef, first of all.
Although,
Second of all,
Well, I get to eat at my own restaurant.
I
would
want
be-
chat to be very honest. Very honest. How many of you, before this question and explanation, knew what Michelin stars represented? I'm going to go out on a limb and say that there are more people who had no idea what that meant than
I actually
Masters?
disagree. No, I disagree.
I disagree.
I
But-
disagree.
but
People
hold on.
not seen Ratatouille?
Yeah,
Oh, that's true.
exactly.
They talk about
There
Michelin
you
stars
go.
and Ratatouille?
I believe
Yes,
they do.
dude. That is so common. You ever heard
believe
of
they do.
5-star restaurant, 3-star restaurant? Dude, everyone knows what a Michelin star is.
And nobody's been there.
Well, I guess I'm
But
not
what-
everyone.
The last word is got to be
You're
from
special.
me because I'm not a bully and I am not receiving a bully. I think
He's neutral.
I think what would be really cool is if Tiger Woods did like a Gordon Ramsay type TV show where he went around and like yelled and cursed at like young aspiring golfers and trained them up. I think that'd be really funny. Okay,
Dang,
moving
the chat's blowing up with people
I
saying,
saw
yeah, I
there
knew.
were some people that said they did not know.
Yeah, but this majority.
No, well, there's
overwhelming
some
majority.
people saying they knew what a Goodyear star was. They're talking about tires. They're talking about
Oh.
Michelin tires.
That's one person.
So,
Okay.
all right, we're gonna continue on with the rest of the show. Thank you, T-Shroom, for the question of the day.
Anyone
As much
can
as I
cook.
did not like it. Wow, Crypto Set Guy's on my side for once.
What?
Wow. We just became best friends. I think me and Jeff is what just happened right there. Goodness. All right, that was enough coffee for today. We're gonna jump into some crypto. Caleb, I would love to get your take on what you are seeing happening right now on the global economic front. Of course, this morning we do see the Dixie going back up, but over the last couple of days, of course, crypto and equities has been going back to the upside, and there's a lot of fear, uncertainty, and doubt in the banking industry right now, especially over in Europe right now. Could we see potentially with banks on the brink of going insolvent, do we see the Fed, not only in the United States and others, starting to help bail out banks and get away from quantitative tightening and going back to easing? Or do you think that Jerome Powell continues on down the road of raising interest rates and making things a whole lot worse for the rest of the economy?
All right, super loaded question. I expect nothing else from this
That's
great show.
Always, yes.
I think, generally speaking, I got a text from my mom yesterday, and she was kind of saying, like, what's going on in the markets? Why are things, rebounding so aggressively? And I basically just got back to her and said, look, we're going to stay the course, continue to go about our DCA schedule. From my perspective, sentiment probably got even worse than it was in mid-June. And, although like in mid-June, we had a lot of stuff going on with Celsius, with Three Arrows Capital, this, that, and the other, right? But right now, in terms of like actual sentiment and enthusiasm for markets and pricing, it's basically vanished. And so when we think about a market that's become so consensus bearish, anything can essentially catalyze upward momentum. And when it does, it could start to lead to some degree of FOMO, whatever the case is, to bring things higher. And so I think, the extremely negative news over the weekend and kind of the extremely like bearish sentiment overall about, the potential risks, the systemic risks of Credit Suisse really kind of got called into question. People were very panicky about it. We started to hear rumors about an emergency Fed meeting on Monday. What does this mean? What does this mean? Turns out it wasn't necessarily an emergency meeting. This is something that happens on a consistent basis. And, this, that, and the other. But the markets took this as some sense of a potential pivot, right? And again, a market that is so desperately clinging to monetary stimulus is going to find any hint of monetary stimulus to fuel the next potential rally. And so I think that's generally what we got on the Monday and Tuesday sessions. This was the strongest two-day performance for the S&P 500 since March of 2020. We know what happened during that period. We essentially started, well, actually, I don't know how much further we fell during that time before we actually got to the lows. Either way, it's an extreme reading to have 2 days that are that powerful. And so from my perspective, generally, I think the market is once again going to wake up to this, quote unquote reality that the Fed isn't pivoting, that Jerome Powell and the Fed officials are going to continue to stay the course. And Tim, you and I had some DMs, I think it was on Monday morning. But I was essentially telling you, from my perspective, Credit Suisse doesn't pose nearly the systemic threat that Lehman Brothers did back in 2007, 2008. And the reason why I say that is if you look at Credit Suisse stock over the course of the last 10, 20 years, it's just, it's a steaming pile of what.
Yeah.
And, Lehman at the time was considered kind of the gold standard of a financials stock, if you will, right? I mean, everyone was buying, trading, and owning Lehman. And they were a major player on Wall Street, and they were a critical kind of cog in the wheel, if you will, that connected a lot of the broader financial system. And so when Lehman went under, there was a massive amount of this systemic risk that it posed to the broader system. I personally don't believe Credit Suisse poses that much of a threat. Obviously, it would be a big impact if Credit Suisse went under, but to try to compare it to, a Lehman moment, I think is a bit misunderstood. And so, I don't know exactly how this is going, because you raise a great point as well, which is that, the European banking system isn't nearly as strong as the US banking system or even the Canadian banking system. And so what happens, what would the ECB do if there really does start to become a mild systemic risk in Europe, in European banks, which, typically are very over leveraged, undercapitalized, so on and so forth?
Yeah, I mean, I hear you, and I'm listening. I think you're very right in saying comparing what's happening currently with the Swiss. Is it how do you say it? Swiss or
Credit Suisse?
Swiss. Okay, Swiss Bank and Lehman. There are different situations, but there's a couple things happening right now. So I was watching this video, and again, I said this today. I cannot remember the guy's name. I'd never heard of him before. I should go back and give him, because I want to give him credit. But he was discussing how we have had times in the last 100 years where we've had rampant inflation, but you don't see necessarily the economy struggling as much, and you don't see banks in as much trouble. We've seen times where the banks are in trouble, the housing market's in trouble, all this stuff's in trouble, but the inflation is not yet necessarily out of control. This is the first time in 100 years since the Great Depression that we are having a very, very, very negative side effect on both fronts, right? And this is the problem, because I'm hearing what you're saying, and I think that makes a lot of sense, and potentially maybe Jerome Powell is leaning that way. I want to hear the next time he comes out and speak in public, I want to hear where he goes with this, because everything he's pointed to at this point is looking at unemployment rate, looks like the most important thing to him. But we just entered a brand new category of, even though the Swiss bank is not as big as the Lehman one, what we're seeing European governments do, what we're seeing Asian governments do, where they're actually starting quantitative easing. They're actually going to take their foot off the gas. They're going to start taking power away from their currencies, which means if we keep the pedal down on ours, the US dollar, and the dollar value continues to go up, and these other currencies are going down, that will lead to an absolute crisis globally, because we work in a global economic fashion. It's actually very dangerous to watch these dollars and other currencies begin to separate. You want some balance going on there. And so my question is, not because of job opportunities or anything else, but will the Fed and Jerome Powell be forced to look outside of the United States to start making some of these decisions, knowing that if they continue to pump value into the dollar, despite the fact that these other currencies are dropping, we could set up places where trade becomes almost impossible. And we're not talking about economic hurt and economic pain in the United States. We're talking about economic shutdown. And I know he said the road to a smooth recovery is slim, and I know he said we're going to go through a lot of pain, but an economic shutdown is not the pain he is talking about. He's just talking about things getting expensive and things getting hard to purchase. We're not talking about expensive. We're talking about they do not exist. He wants to lower the supply, not destroy it completely. So this is where I'm kind of starting to get a little bit direction. Again, I want to hear how he responds to this, but I think there's a very good argument to be said that he is stuck between a rock and a hard place. And as we title this video, he messed up and he knows it. He should have started these interest rate hikes back in February when he when he first started talking about the fact they were going to do it at all. He knows he messed up, and then despite the fact he says we need to get it out of the way now, he is stuck between a rock and a hard place of he's going to screw some things up. The question is, which is the worser way to go? Worser.
Yeah, I think I'd agree with a lot of the things that you said there. In my opinion, a lot of crazy, terrible things sequentially need to happen in order to kind of get to that like doom scenario, if you will, where there's a complete economic global shutdown. In my opinion, that it's a risk, but it's a fairly minimal risk. And obviously, like I said, with what's happening, I mean, we have to really differentiate between what's happening with European banks and what's happening with US banks, because we're not seeing the same risk in US based banks. If we look at delinquency rates, foreclosures, anything of the sort, collateral quality, credit quality, everything is top notch right now in the US. So US banks seem to have a very strong defensive moat in order to be able to navigate a variety of economic and financial conditions. Obviously, I don't think we can say the same about European banks, but now we must really be able to understand, and I don't necessarily how interconnected these European banks are with US-based banks. And, I used to work for a US-based subsidiary of BNP Paribas, Bank of the West. They've since been sold to a Canadian bank. I can't remember which one. It might be RBC or Bank of Montreal. I don't know. Anyways, so some US-based banks certainly do have international exposure or some sort of dependence or reliance on a larger international bank that might operate in Europe or Southeast Asia, whatever the case is, right? I mean, we have HSBC, we have, all of these different international banks, Nomura, so on and so forth. And, that's just not something that I can conclusively say to be able to understand how interconnected these US banks are with international risk, if you will, right? Yeah. You made another point that I wanted to address as well, but I can't remember exactly what it was.
Going to be the value of the dollar versus fiat, the concept.
Well, yeah. Sure. And so, I mean, the dollar has been strengthening all year. It's no secret. Everyone knows this at this point. And, I don't see any trend shift in that space. And, I think you raised the point, and this is what I wanted to go back to is, what other central banks are doing right now. We've had the Bank of Japan. They never even started a tightening process. They've just continued to operate in a monetary stimulus manner. The thing is with Japan, they have very low inflation, especially relative to the rest of the world right now. I think it's still below 3%, which is, an interesting phenomenon in and of itself. We've started to see somewhat of a pivot, if you will, from the Bank of England. The ECB doesn't necessarily seem to be pivoting. The Bank of Australia just the other day, I think they were forecasted to do a 0.5% rate hike, and they ended up moving forward with a 0.25%. So again, people are starting to interpret some of these pivots, right? But for the Fed, it just really feels like still foot on the gas pedal, if you will. And so again, we're seeing more strength in the dollar. I was on your guys' show last week, a month ago, saying, look, in a trending market, we're going to go through big extensions. We're going to go through periods of consolidations and then a new breakout and trend continuation. Seems like we've gone, at least for the last week and a half, through one of those cool down consolidation periods. And now today we're back over 111. That was my downside target based on the Keltner channel that I shared with you guys. And now we're back above that range once again.
Yeah. I've actually got a question. Caleb, in your last newsletter, you started to allude to real estate ETFs and how that could be kind of showing us some foreshadowing of what's to come in the market. Do you mind getting into that a little bit here in our discussion?
No, I don't at all. And that newsletter was exclusive for premium members, but I'm happy to just generally talk about some of the takeaways that I had from that, which is essentially, the real estate market is not nearly as liquid as something like the stock market, right? Which trades minute by minute, 5 days a week, 6.5 hours a day. And it's very hard to get real-time quotes on your real estate property. Very similar to how difficult it is to get real-time quotes on NFTs, right? And so when we try to think about some of the fundamental catalysts that are happening right now in the housing market, and the big one that I've really paid attention to is the year-over-year rate of change in 30-year mortgage rates, basically seeing that as something that could catalyze a significant decline in both demand and supply. And it's somewhat unsure how that's going to shake out, but my general thesis is that broadly speaking, the only way buyers and sellers are going to be able to find equilibrium is if prices come down, because people can't service the debt on mortgages with 7% 30-year rates and near all-time high housing prices. And so the only way that buyers are going to be willing to step back in with rates this high is if housing prices come down, right? Because debt service payments are a function of both principal and interest. So that principal amount needs to come down if the interest rate is going to remain so high. I hope that makes sense. And so for me, I'm trying to look to the stock market and at real estate stocks in particular to try to see, well, how have they behaved so far? Because if we think about real estate stocks, how are they valued? They own assets, which are real estate. So they own real estate on their balance sheet, and they might lease out that property, generate cash flows from it via rents. And so all of the future cash flows of these real estate businesses is tied to two things: the values of the property, and B, the cash flows, AKA the rents that are generated from owning that property. So when we think about how these real estate stocks are valued on a day-to-day basis, minute-to-minute basis, it's dependent on two main things, rents and property value. And so we can try to extrapolate, at least with some degree of consistency, how that property value portion is essentially being priced in the market today, and try to allude to where pricing could go in the future. So in that report, I looked at a couple large scale ETFs, looking at something like XLRE, which is primarily just a bucket of both commercial and residential real estate investment trusts. And then also looking at the home builders ETF XHB. And both of them are very structurally weak. They've massively underperformed the S&P 500 this year. And so when we think about tying that into what does that mean for stocks, it generally fits within, or excuse me, what does it generally mean for real estate prices in the US? To me, it generally signals that we're still due for a correction. And it really fits into that thesis that I had about that principal amount needs to come down. So we're going to see demand shrink significantly.
Yeah, absolutely. Well, if they subscribe to the premium version of your newsletter, or the pro version, is it pro or premium? I can't remember, but you know,
I refer to it as premium. But
premium, yeah, they'll be able to get all of that granular data on that, and obviously whatever forecasting and whatever insights you provide in the future. So I would recommend it. I definitely enjoy your newsletters every week.
Thanks, T-Shroom. Appreciate you.
If you guys do not subscribe to Caleb's newsletters, it is one of those ones that you read, you're like, oh my goodness, this is amazing. So I heavily recommend you guys go get that. Let's go. We've been having a discussion here, and we're going to continue to have this again. This conversation is not going away. The November 2nd is when we'll officially get those numbers for October, or not the numbers, sorry, the rate increase for October from Jerome Powell. But I'm interested to see if he starts to kind of sing a different tune. Not unlike Jerome Powell. We've seen him kind of flip-flop his narrative here a little bit throughout the year. This is a situation that could make him flip back to being a little more dovish rather than hawkish, but we'll keep you guys updated. Are there any charts that you're seeing that you absolutely think that people need to be checking out and watching right now? We've discussed a little bit of the Dixie, but what about the yields? What about bonds? That's something I thought I saw the other day, that the bonds were going up, yields are going down. Oil, is there any charts you're saying, hey guys, you need to make sure you continue to keep your eyes on these charts?
I love how you brought up yields. I'd love to just kind of generally share what I'm looking at there. Yields are basically the first thing that I check every morning, because they essentially act as the discount rate to calculate the present value or the price of any asset in the market. And so when we think about yields, literally yields are used to price assets. So if we understand where yields are headed and what's driving yield dynamics, we can get a better understanding for how the broader markets, whether we're talking about crypto, real estate, or stocks, and bonds, of course, how those are going to react based on changes in yields. And the important thing always to remember is, all else being equal, yields and asset prices have an inverse correlation. So as yields go up, asset prices go down, and vice versa. So I'd love to just really quickly share some of the things that I am seeing in the yield market. Let's go ahead and just start generally on the shorter end of the curve here. Let's see, I gotta move this toolbar. Perfect. So what we're looking at right here, let me switch this over to weekly candles. Actually, this is 30-year treasury, 5-year treasury yields. And we can see, right, we're just blasting through this 2018 resistance zone from the Fed's prior hiking cycle. We had the massive decline in yields here from COVID, and it's just been higher highs and higher lows ever since then, right? And we can even see, I mean, you can maybe make a case like right here, we had somewhat of a lower low, but it depends on your time preference. So from here to here, we had a higher low. So that's definitely something to watch, but either way, we continue to make higher highs along this entire journey. And so, 5-year yields ripping higher today, up 3.6% pretty much. That's a massive move. If we switch over to 10-year yields, this is also very interesting. I guess I removed one of my levels here, but let's actually switch this over to daily candles, because I think this is important to see, is that if we come in here, yesterday I outlined this breakdown in real time. I've been sharing this trend line since early September, and we actually broke below it yesterday, but basically closed right on it. Obviously, that means it could act as potential resistance and have a downward continuation, but it just hasn't been the case. Today, 10-year yields up 4.25%. So again, that's another massive move. And if we look at the general trend here, again, we're seeing the same thing, higher highs, higher lows. If we zoom out even further and look at 30-year treasury yields, I did outline this potential scenario where yields, 30-year yield could cool back down, retest this 2018 resistance and 2022 resistance. This was clearly our breakout zone launch pad. But what's happened, I just outlined that as a potential scenario yesterday, but obviously today we're rocketing back higher, up 2.5% today. And so 30-year yields today are, almost at their year-to-date highs. And if we zoom out further, this is the highest these yields have been since basically 2014. So again, yields right now are just pushing higher and higher and higher. We're going to come into another breakout zone here as well, right? We have this massive kind of pivot level, right? When yields go on this massive run through here and then all of a sudden get rejected and just, continue to make lower lows through this period, this is definitely a pivot level everyone should be watching. So that's at 3.9% on the 30-year treasury yield versus today it's at 3.78%, let's call it. So that's definitely going to be something to continue to watch.
Yo, Caleb, I got a question for you when it comes to looking at those yields charts, because when you're looking at cryptos and several stocks, you can watch and kind of play out, using technical analysis, manipulative moves where people actually, or whales and institutions, they'll allow a price or a stock to rally for a little bit solely so that they get their take profit level before they kind of just dump that on the average retail investor. Yields, does that work the exact same way, or do you think that's a lot less common? So like when we see these pumps coming to yields, is that something that could pump for the next couple of days as a form of just a place for some whales to take some profit, or is that actually a sign of smart money coming into this space and this could climb a lot higher?
I generally view it, that's a great question, Tim. Admittedly, it's not something that I've deeply thought about. But I think generally speaking, it's just a lot of smart money. When we think about the U.S. Treasury market, it's probably, in terms of daily volume, it's probably one of the highest volume markets in the world, aside from currency markets. And so when we have all these massive smart institutions at play, it'd be very hard for any single institution or even a group of institutions to dominate the market, manipulate it in such a way. Ironically enough, the Fed is the largest manipulator, right? And so when we think about the Fed controlling the cost of capital, they were buying, what was it, $60 billion a month in treasuries, $80 billion a month in treasuries. And so obviously that's what kept such a massive downward pressure on yields. And as that liquidity has been removed from the system, yields have gone up tremendously because there's no longer a buyer with massive deep pockets.
Wasn't it the Japanese central bank that did something recently where they started to dump U.S. bonds to be able to buy their own currency, the yen, and that showed that it had just a blip on the radar of price for yields. It barely did anything. It did come through, it did print, but it immediately resumed upward. So it just kind of goes to show that even a central bank that's not the U.S. Can barely do anything to move the volume.
Yeah, that's a great point. And I have seen something about foreign institutional ownership of treasuries has been steadily declining. So that's definitely something interesting to see. And think about it this way. If the Fed provides a significant amount of signal to the market, and when the Fed announces, hey, we're going to do stimulus, and the way that we're going to provide monetary stimulus is by going to institutions, and we're going to buy treasuries and mortgage-backed securities from them. If you're one of those institutions and you now have a client, which is the Federal Reserve, telling you that they want to buy something from you, what are you going to do? You're going to buy more of those things in order to sell them to the Fed, which is buying $80 to $90 billion a month, right? And so when the Fed forecasts and tells the market, hey, we're going to do monetary stimulus, we're going to buy treasuries and MBS, all these institutions have a massive incentive to also be buying treasuries and MBS, because they now have someone to sell it to. So their risk is very minimal because they have massive liquidity in the system. They have a buyer. When all of a sudden that stimulus gets withdrawn and the Fed is now saying, hey, we're looking to sell our treasuries and MBS, why the hell would an institution want to own it, right? Yeah. There's no incentive. And so it's a very interesting dynamic. And so as the Fed continues to shrink its balance sheet, which they've only just really started to do, I think even since the peak of their balance sheet in March of this year, the balance sheet has declined by less than 2%, the size of the balance sheet. I think it's around there. And so as we continue to traverse a path of a monetary tightening regime where the Fed is now aiming to reduce the size of its balance sheet by a more considerable degree, that is only going to create even more tailwinds for yields to rise, because institutionally, globally, there's going to be less demand for treasuries.
Yeah, that makes a lot of sense.
Yeah.
You know, here's something I want to see, Caleb, before we move forward, because we're going to be jumping into a community post. It's a good transition here because I've seen lots of questions in chat. Are you good to hang with us during community section and answer some questions?
Of course, man.
Awesome. Well, I'm going to start off. We have some super chats, and we're going to get there. But there was a great question in chat from Brian D. And I know we've talked about this, but there are probably a lot more people out there like him who are asking this question. So he said, anyone, I don't know enough about yields. Do they run with the Dixie or no? And I'm going to add on to that something where when you're looking at smart money, because that's where we really, in retail investors, we should be watching. We should be constantly worried, what is smart money doing right now? Can you help break down Dixie and yields and where smart money moves? And is there ever a difference between the two of them, or do they always run in sync with each other?
This is one of my favorite questions. So I'd be super... what was the name of the person who asked it? Was it Brian?
Brian D, yes.
Brian, awesome. Brian, I would love to provide some insights on this for you because I have discussed this in the past, and it's actually a beautiful, phenomenal relationship. So what I want to do really quickly is we're going to pull up 5-year treasury yields. So this is relatively shorter duration. And what we're going to do is we are going to add and we're going to compare. Let me do custom symbol here. And what we're going to do is we're going to add the DXY on top of this. And so, this is a very unique period back here because this was COVID. So we had a massive rush to safety. So there are unique moments in a market environment where we're going to see a divergence in this. But if we just zoom into when we really started to get clarity on the direction of monetary policy, 5-year treasury yields in candles, and we're looking at the US dollar, the Dixie, in the teal line. We can see, generally speaking, these two things are going to move in almost perfect, complete lockstep. If we zoom in on the dynamics for 2022, again, very similar. We're going to go through periods where, maybe 5-year yields are going up and, the dollar's just kind of steadily chopping around, so on and so forth. But generally speaking, this dynamic is very important to watch. We can see they both peaked perfectly here just a week and a half ago, and now they've both bottomed almost perfectly just recently. And this is a super, super important dynamic to watch because it also has a lot of extreme implications in the currency markets as well. So if we look at something like the US dollar versus the yen, right? One of the most popular global FX pairs. And we also compare this, actually what I want to do, not compare it versus the Dixie because that's basically looking at the same thing. But let me remove this study. So we'll get rid of the Dixie. And what we'll do is we'll go ahead and add on 5-year treasury yields. So let's do FVX. Again, let me get rid of these drawings too, so we could just clear that out. What we can see is that the US dollar versus the Japanese yen is extremely dependent on where 5-year yields are trading. Look at this correlation is almost mind-blowing how perfect it is. And what we see is that yields drive FX dynamics, and they also, which therefore means it's going to drive the value of the Dixie. And so when we think about the yen, I think being the second largest allocation within the Dixie, the euro is first. What we can see is that, if yields are driving the currency relationship between the dollar and the yen, it's going to have a significant impact on the Dixie overall. And so we can even look at something like Euro USD, and I'll just invert this. So essentially what we're looking at right now is dollar euro, and we see the same exact trend. They're going to move in near perfect lockstep. So as yields rise, the value of the dollar is going to rise versus other currencies, which therefore means that the Dixie is also going to rise. I hope that's a little bit clearer now.
Great question.
Yeah, it's a very good question. Again, I had the same question here a couple months ago, and then that's when Caleb explained it to me, but I knew a lot of people would benefit from getting that one. Now, I saw some super chats that looked like they were even directed towards some things we talked about with Caleb. So, Smay, you want to go ahead and read? I know I saw a couple of them today, and now I know there's a couple of them. I know sometimes there's only one, but there's a couple.
There is, in fact, a couple of them. Thank you, Tim, for sending it over to me so I can read these super chats. There's actually more than a couple. There's 3. So, because I was told when I was younger that when you say a couple, it's actually referring to 2. So there's 3. So there's
it's a
more
crowd,
than a couple.
technically. 2's a...
3 is a group, a squad. I don't know. Anyways, I'm going to read these. So we have here, well, actually, it's funny. We already read the first one. So technically, you're right. There are a couple that we haven't read. So here we have from JT Skinner. Dodd-Frank strengthened U.S. banks, but there is still credit risk with the fall of European banks. Dollar at 115 will handicap the Fed from rate hikes. What are your thoughts, guys?
So he's saying if it goes up to 115.
Yes.
Yeah. Is there a Dodd-Frank equivalent for the EU, though? I would imagine that there is.
I don't know, to be honest. I tend to stay out of the regulatory side of things. So even if someone asked me what is Dodd-Frank, I think generally speaking, it was somewhat of a separation between like trading and depository institutions, something along those lines.
Yeah.
But even for me, it's very blurry.
Yeah, investing and saving banks had to be separated.
That's it. Thank you.
Interesting. Seems that JT Skinner has asked a question that is insurmountable for the team. But next we will go to the next super chat here from Murray Ruggiero. Says on-chain shows Bitcoin going off exchanges again. You feel crypto will decouple from the U.S. stock market at some point? What do you guys think?
I wonder if he's adding on to what we reported yesterday, where in one day, and I'm gonna preface this because I saw someone comment on the video yesterday saying, "Hey, that level it equates to like 0.1%." The significance of that $683 million worth of Bitcoin that left, or not 600, was it 683 million? Yeah.
I think it was
683 million. Yeah.
Okay.
So $683 million of Bitcoin went off exchange. That's 0.1% of the entire market cap. It happened in one day. That's what makes it significant. So my question, Murray, and if you're still in chat, you could comment this. Are you saying that you see something new today? Are you talking about that one as well? We discussed that yesterday, how that is bullish long term, because in a season where there is a lot of negative sentiment, for 683 million of Bitcoin to move in one day, dollars that is, that signifies, or that signals to me, smart money moves. And again, I'd be interested tomorrow when Kelly's on the show looking at some on-chain metrics to see even more in detail. But Caleb, do you have a thought about that and an opinion about $683 million in one day being moved? And if there's more, that's even bigger.
You know, I do follow a lot of on-chain guys, but it's not something that I actively track and monitor. So, you know, first of all, that's news to me. I think just kind of going to the crux of his question about correlations between stocks and crypto, broadly speaking, I've been on your guys' show and we've talked about the correlation between Bitcoin and even a variety of altcoins between with the iShares Expanded Tech ETF, which is the ticker symbol IGV. And so when we think about just generally speaking, that crypto is largely viewed as a long duration asset, it doesn't necessarily pay any dividend yields, it doesn't necessarily generate any cash flow. From a traditional perspective, it's a speculative asset that very much, you know, mirrors something like a tech or a growth stock. So as you know, the Fed dynamics continue to dominate the market environment and yields continue to control the narrative, correlations are expected to be, you know, trending towards one, which means that stocks and crypto are going to continue to move in the same direction, broadly speaking. Over time, I expect to see Bitcoin become less and less correlated with stocks. That's going to be a journey. It's not going to be something that happens overnight. This is going to be part of the maturation process for Bitcoin, if you will. But I think generally speaking, my view is that crypto will largely continue to trade alongside stocks. And as that, you know, because as Bitcoin goes, so does the entire crypto market. And so if I'm saying that I expect Bitcoin to somewhat deviate from stocks over the long run, I would expect crypto, generally speaking, to move somewhere in between both stocks and Bitcoin.
Yeah, it's going to be interesting, but I think there's some good points there, Caleb. I know, but you know, historically, you guys know how we talk about this channel. Inflows to exchanges, you're looking at potential opportunities to take some profit. Outflows means that they don't want to take profit on that. They're going to just go ahead and put that in cold storage. And they'll let it just ride. So we'll see, and we'll keep you guys updated on that. Again, tune in tomorrow. If you want more information on-chain, you don't want to miss tomorrow when Kelly is on the show.
That's right.
That was it on Super Chats, right, Smay?
Yes, sir.
Do we see any other really good chat, just normal chat there? I know in the future we're going to be bringing in some Twitter questions. So real quick, you know, as Smay's kind of looking to make sure he doesn't miss anything, if you guys are not following us on Twitter, there's a couple of ones you should follow. First of all, you definitely should be following Caleb Franzen, at Caleb Franzen, the easiest way to have it right there. You should be following T Shroom, at T Shroom.
There you go.
You should be following me, at Tims_TA. You should be following Smay, at Smay Nakamoto. You should be following Coffee and Crypto. This is the confusing one. It's at _coffee_and_crypto_. Make sure you're following us and engaging with us because we're going to be doing a lot more interacting with Twitter to even incorporate some stuff on this show. If you're not even on Twitter, that's fine. We will find ways. I know in the past people have said, oh, I don't have Twitter. How can I engage? We will still be engaging here on YouTube and other platforms, but we do want to be a bit larger presence on Twitter. So make sure if you're not already following us, go and do that right now so that you can be engaged. We're about to jump in here, if we don't have any other questions, and do a little more technical analysis on some of your guys' community-based TA, these are the things you guys asked for me over on Twitter. But Smay, any other questions you're seeing in chat that we should answer?
I have not seen anything huge, but here's one actually from Meech says, Tim, could you compare today's Dow Jones chart to the 1929 Dow on the monthly candles?
I could do that. Let's see. Let me see.
Yeah, we saw that one yesterday. I was very perplexed by that. While he's doing that, I've got a question for Caleb. Caleb, what do you need to see on the print on October 7th for unemployment rate for that to start to sway Jerome Powell? Forecast
to sway him to slow down the rate hikes?
Exactly, yeah. Forecast is 3.7. Previous was 3.7.
Yeah.
My guess is kind of 5.
This is a really great question.
My guess is probably 5%.
My takeaway on this topic is that the Fed is looking at unemployment kind of on a spectrum, if you will. So it's about the trajectory of unemployment. And, they've been very vocal about trying to get the unemployment rate down, or up, by essentially, hoping to soften the labor market. And so, ideally, they'd like to get that above 4% and slightly even higher than that. And so when we think about the unemployment rate, which has been at like 3.5% for multiple months, and just for the first time went up to 3.7%, a lot of that dynamic happened because labor force participation went up during that month. And so labor force participation and unemployment are going to move in the same direction because of the way that these two metrics are calculated. I don't want to get too into the weeds on that, but I've written about it extensively both on Twitter and on Substack. And so as we saw a big increase in the labor force participation rate in the prior month, it's no surprise to see unemployment also go up because people are returning into the labor force after being discouraged workers is how they're formally classified. And now they're looking for opportunities. And as they're now looking for opportunities, they're actually officially counted as unemployed. Whereas when they were considered to be discouraged, they were not counted in unemployed. Right. So again, we expect to see a normal correlation there.
Cool.
And so for the Fed, I don't know where unemployment is going to be, but even if it goes to 3.9%, which would, as you mentioned, be significantly above what the estimates were at 3.7%, which was also the prior result, to me, that only reaffirms that Fed policy is working. It is having its effect. It's taken perhaps more time than they would have liked to see manifest. It could give them reason to, I don't want to say pump the brakes, if you will, but recognize, okay, our policy is working. We need to stay the course, but maybe we don't need to be as aggressive. So that will be interesting to watch. And it's a very, very important metric, as you point out. But I just want to mention one last thing. It's going to be extremely important to compare why that unemployment rate is rising. Again, is it because labor force participation is also rising, or is the unemployment rate rising while labor force participation is declining? That would actually be a sign of softness. If the labor force participation is rising while unemployment is rising, that's a sign of an extremely strong and dynamic labor force, because people who are unemployed are now saying, hey, there's all these great opportunities. Let me go in there and see what I can find. So that dynamic specifically is what's going to be important to watch.
Thank you, Caleb.
That's good stuff. What were the years he was asking me to compare?
37? That's so far
29.
back.
It was
29.
1929.
Yeah.
Well, so go to my screen here real quick. We're going to be very brief here. I don't know exactly what he's asking. Maybe in a future video we'll go in deeper right here. But this, back in 29, this is, of course, this massive plummet we had back here between 29, and it was still, it moved bearish all the way until it bottomed out here in 1932 in June. So I'm a little confused as to what he's asking me to compare here.
I think I know what he's asking.
Yeah, so read the question again.
So what he's asking was literally all he asked was just to compare the two, now and 1929 Dow Jones. What I'm thinking it is about is to compare potentially how bad we are economically now compared to how it was in 1929.
Well, I mean, I'll have to go deeper and look at more things. I'll have to explore some things, though. Number one thing I can say right now is, of course, during this crash, this was an 89% crash.
Yeah.
I don't trade the stock market. I don't trade Dow Jones, but I know Caleb can answer this very quickly. 89% crashes are very rare. That is a massive ordeal. That's not fun.
Is that the Great Depression?
Yeah, the Great Depression started in
is.
1929.
Yeah,
so
okay.
if this person's trying to predict that we're going to be heading into
That's
That's what I think it is.
I don't think that's going to happen.
We're not there yet.
For reference, we are down 22%, almost 23% right now from the peak we had back here. When was the peak? I guess I'm assuming it's going to be in January of 22. So we actually peaked in January here on
for the Dow.
And
The
89,
NASDAQ peaked in November, though.
89 would bring us, well, we got to scroll here for a second. It would bring us very low. It would bring us, if we copied it exactly, we're looking at coming down to about just under 4,000, and we're currently sitting at 29, almost 30,000 currently.
So what we're discovering is that we are not headed into the second Great Depression.
I think it's a little bit out of context to say let's compare the Great Depression to right now and act like we're going to see the exact same thing happen.
Yeah, and keep in mind that the Fed was founded in 1913. So the Fed, the concept of supply increase and supply decrease from a central bank was really only getting started. It was in its infancy, and that's played out through history. A lot of folks thought that the Fed didn't do enough during the Great Depression, and so that's what's been the underpinning of federal policy Fed policy. Probably not today. I think they've instituted the reverse ideology to get out of 2008 crisis. So now that's kind of more the bedrock. Like that's kind of more what we're learning from. So hopefully in the future, Bitcoin's going to take over, and this whole problem won't be as much of an issue.
Well, I think another thing to note is that our money was a little different back in 1929 because we were still technically on the gold standard. So that definitely plays a part.
Yeah. Last question. I'm going to do some TA
Matt.
here. I saw this question though from JT Skinner. He said, "TA Tim, what would you keep the Fed from lifting rates in your opinion, or is 4.5 guaranteed?" Nothing at this point is guaranteed. I'm going to be very brief with this. And it's not about do I want them to stop raising them, because inflation obviously is something that's out of control and I want it to be fixed. The question is, what is going to come? If we fix inflation, what will happen because of it? Here's what I really boiled down to, and that was the whole purpose of this video. If you're looking at the title, it doesn't matter what we want. There will not be a good outcome. We are about to enter pain. The question is, does that pain allow equities, things like Bitcoin and crypto, to move up while the rest of us are losing our jobs and we can barely afford how to pay for things? Or are we going to be able to keep our jobs? Are we going to be able to, keep cost of living down? But of course, then you see equities and stuff begin to plummet, set brand new lows. That's kind of the place I'm sitting in right now. Is you're going to be in pain one way or the other. The question is your Bitcoin portfolio up or is it down? And do you have a job and can you afford to pay for things? That's the things at hand. There, you will not have all of it. This is a situation we will not have our cake and eat it too. Something's got to give. The question is, which way does Jerome Powell and the Fed go? Yeah. Let's go ahead and jump over to some charts again here. Don't go to my screen just yet. I'm going to do a quick check-in. And here in about 10 minutes or so, we're going to announce the winner of the game that we started, the over-under. Come on now, chart. Work with me here. Yeah, we're going to announce the winner here at about 11:25. So we have time to do that, talk about it, and then close out. But if it were to close right now.
Are you ready?
It's at 19,900. Yeah, I'm on my screen. You're good. Thank you.
Well, you didn't tell me, so
You're right. You're right. That's on me, man. 19,900. This would be a win for me. I had the over on this one. Both of them in this room said under.
We're not done yet.
Yeah, we had like 8 minutes here. We got I got XRP sitting at 48.2. The over-under was at 47.8. I had the over. You two took the under. And on DOT, the place to be is 635. Currently, we're at 631. I took the under. Smay took the under. And T-Shroom took the over. So, Smay, you would get a dub in that category. But again, we still have like 8 minutes.
So far,
6 minutes.
You're going to win.
If things don't fall like crazy, I should
Hold
win.
on. I have to call somebody real quick. Hey, retail trader, dump the price.
Yeah, for real.
Pump it. Dump it.
All right, let's go look at the coins that you guys chose. Again, this was over my Twitter. The number one coin you guys voted for me to do some technical analysis on is Algo. So let's go over here and look at Algo really quickly. First of all, we did have a good amount of volume come into the space during this last little rally. So that is showing there are some signs, a lot of interest in Algo right now. We're kind of working a little bit setting up a broadening wedge. Now we have a falling level of support, a rising level of resistance. So let's watch how this plays out. Do we actually end up coming back down to this level, or was this the last touch? What's cool about this touch, though, on the daily chart was this actually set us up with some bullish RSI divergence. Going back to these time frames right here, is it a lot? No, but technically the RSI is rising, and I know that thing is blocking you guys. That RSI level is rising, but the price was falling during the same timeline. So this was the bullish catalyst right here on RSI divergence that started us up this road. Now, you guys see I have my Fibonacci pulled up. I went back to the peak we had back here in May, coming down to the bottoms that we actually double tapped with wicks down here. So the peak starting at around 78.6 cents. We bottomed out right here for the time being at 27.7 cents. This now gives us some certain levels to look at, and look at how perfectly we rejected at the 0.382, and right now we are below it, but we are hovering right around the 0.236 level on a longer time frame Fibonacci outlook. Let me delete this and actually show you guys a little shorter time frame with Fibonacci. Where could we potentially come down to during this whole little pivot? Currently, after we broke down with wicks coming down to 0.5, we're back between 0.382 and 0.5. So will we find support once again here at about 33, almost 34 cents at the 0.5 level on Fibonacci, and then continue to rally? Or will we potentially continue to fall back towards golden pocket, closer to 32 cents in that region? Last thing I want to look at to just say what's going on here on the daily chart, and I'll look at the 4-hourly chart as well. Lux Algo at the moment, and that means I can see right now, the fact that I didn't see anything. We have been in a sell order. Again, remember, my sensitivity is sitting at 40, which means I don't want a lot of signals. I want strong signals. This would have been a very good trade with Lux Algo, because you would have entered a short right here back in December of 2021, and you would have had really no reason to exit your trade all the way till now. So still, now it has an absolutely ridiculous take profit at 6 cents. I do not see us going down that far, but we have not had a daily buy signal on Algo for a long time. Let's look at the 4-hourly chart and see if there's any more hope there. Again, I actually look at that when I'm reading my Lux Algo. I look at the fact that we haven't had a buy signal yet. That's not the end of the world. On the daily chart, it could be coming very soon. The 4-hourly chart is under a sell order right here, and of course, if you had entered, you would be having some profit. You could have taken some good profit. We technically already hit our take profit on these levels. The question is, are we going to hit it once again? Are we going to start to have a new rally? Keep an eye on Algorand to see if we can actually flip this and head back to the upside. But as it stands right now, Lux Algo and the charts still show there's a chance for some downward movement before a buy order comes in. The next one I saw that people voted for was Matic. So let's go over here to Matic, and I'm going to start out on the daily chart. Let's look at what is happening over here. So this is one I actually did some technical analysis on yesterday, but I'll continue to do more today because you guys asked for it. So I'll kind of reiterate, if you guys weren't watching the show yesterday, there's a descending level of resistance that is coming back from some peaks we had back in December. Yes, our high ended up happening later in December, but early December, if you were to look at this peak right here and continue to run it down the list, this has worked as resistance right here back in December and several times this year. As we start to approach it, the question is, can we actually end up breaking through? Using our fixed range volume, you're going to see a very key point to keep an eye on will be around 88 cents, 88.5 cents. That is a peak, the next peak level above us on the fixed range volume profile. It also corresponds almost perfectly with that level of descending resistance. If we can break through that, of course, that would start a nice little bullish trend for us, but keep your eyes on what is happening there. Of course, during this time frame I have this volume on, this goes back all the way to April, so which means this covered quarter 2, quarter 3, and now we're early in quarter 4. There's also a very strong level if the bears can begin to gain control. Keep your eyes out for just below 60 cents at 59 cents. That is a level to keep your eye on. Of course, there's several other peaks between us there, 65 cents, 69 cents. But the thing that I'm looking at right now, I do think we have more of a bullish sentiment going on in this space here on Algo. Let me look at the Lux Algo really quickly, and we're going to transition here. At the moment, the daily chart is showing us a sell signal. However, that is looking like we are ignoring it. We haven't even really had... Let's see here. We did have a couple red candles in here, but we've turned back purple, and of course, we're rising. Let's see what the 4-hourly chart says something different than the daily chart. Of course, yeah, there we go. We had a buy signal here the other day, and we have not hit take profit on that. Look where that take profit is. It corresponds to those levels we were talking about, up at 88 cents with that level of resistance. So I'm not trading Matic right now, but if I was, that is the level I'm watching for. So yeah, keep your eyes there. The last one that people voted for today was Crow. And you guys know, Crow is one that I'm not necessarily the biggest fan of as a whole. This is not one I'm going to add to my portfolio. But since you guys asked for it, I will have it. On the 4-hourly chart, we are under a buy signal, but we've been under one for a long time. We've already taken profit on it. I'm not necessarily reading this chart too much with Lux Algo to say that I want to buy. There's a good chance we actually could get a sell order on this one. But things to keep an eye on when we turn Lux Algo off, we do have a flat level of support. What did I just turn on? This chart got messy. We have a flat level support hanging tight right here between about 10 cents down to, well, it's about 10 cents. So it's 10 cents, 10.7 cents up to 10.8 cents. So this range has held tight for us for a while now, since late September. We did have kind of a descending triangle going on that we broke sideways. We did not really break bullish out of, we broke sideways, which means there's a lot of pressure and stuff pulling us right down to these levels. Let's look at our fixed range volume profile, see if there's anything. I'm going to go back, let's see, I'll go out to the daily chart and give this a little bit better of a look. I'll look at the last quarter, starting in July, quarter 3, and go to the current schedule right now. We actually are below the main point. So potentially, maybe we get crypto.com to have a nice rally again to this descending level of resistance around the place. Maybe we get a wick somewhere around 11 cents, almost 12 cents. There also, this volume kind of starts to peak out right here around 11.65 cents. So right now, these charts on Crow, again, not one that I necessarily love, but there is some arguments to be made that bullish action could happen here, but keep your eyes on what we're currently sitting at in a little zone, in a little pocket of volume right here, with the resistance sitting right above us currently. But if we can break through, there could be an easy road back up to 11 cents on Crow. I hope that helped you guys out a good amount. Make sure you guys stay tuned and continue to give me some of the coins you guys want to see, have some technical analysis on, and I can be able to prepare those charts, give you guys the best charting I can. But ultimately, remember, I want you guys to learn for yourself. So when you're seeing me do TA, you're catching some things maybe you didn't see on the chart originally, but you're going back, confirming for yourself so that you can accomplish financial sovereignty where you have control of your money, not your money having control over you. You can't do that if you can't do technical analysis and fundamental analysis and sentimental analysis for yourself. The purpose of this channel is to help your brain start to think, not to do the thinking for you. So it is now past my time. It's about a minute past. Let me see what the prices are. Bitcoin stayed up. Bitcoin currently is sitting at 19,946. So that is a Tim dub. Again, I think we're going to spoil this. I think all of them were. XRP is sitting at 48.4 cents. That is above. That is a Tim dub. And DOT is sitting at 6.32. That is the under. In case you guys are
a Tim dub. That's a clean sweep.
Wow.
And the reason why I saw this really quickly, on Bitcoin, I kind of made a lot of my predictions based off Bitcoin. I went down to the 10-minute chart because I knew when I made the predictions. We had about an hour and some change. Yes, we were falling. Yes, the prices were dropping, and I think that potentially the prices of Bitcoin could continue to drop. But look what it did almost perfectly. I drew this
resistance.
This level of resistance was coming, and I was looking at the 10-minute chart. We were overextended to the downside. On the RSI 15-minute chart, we were overextended. We dropped below the 30. On the 5-minute chart, we were below. So I looked at all these smaller time frames and said, we have gotten overextended to the downside. I'm not saying we're going to go up and hit new highs and go hit above 20,500 again. However, it is time for a rally back up to a point. This makes a lot of sense here with the descending level of resistance. Also, if I were to just use Fibonacci. And again, this is the cool thing about technical analysis. You guys see us mostly do it on the 4-hourly chart. Sometimes we go down to the hourly chart, but daily chart, weekly chart, it's the same technical analysis on these lower charts. So this is something I would have looked at if I do a lot more scalp trading. I would have been looking at these smaller time frames to take advantage of areas. We're currently sitting at a 0.382 area, so where I kind of had that as my level of saying I think we can get up there because we had the 0.382 on Fibonacci. It was time for a reversal back to the upside, and that matched perfectly with our falling level of resistance. It doesn't always work out perfectly. By no means is technical analysis a perfect thing, but more often than not, it ends up being right. And in this case, that is what got me the dub. The reason I went under on DOT, and remember, that was one I was over at first, but we kept moving it up, and I was just looking at 0.635, and I was like, I just think that's a little too high. That would set us a new, that would change this really small trend of setting lower highs and lower lows. I think that we go back up, but I don't think we set a new high in this small trend here on the 5-minute chart. So therefore, 6.35 was a little too high for me. I thought we could have maybe gotten to about 6.34 and stayed below this peak right here. We didn't do it. We stayed around 6.3, 6.3. We got up to 6.33 and then fell back down to 6.32. That is why I won all three of those. I hope that makes sense to you guys. Boom.
Congratulations, Tim. Congratulations. You have now won your first game. And you know what? I'm going to give you this air trophy. There you go.
Excellent.
So, Tim, where are you going to put it?
I don't know. I'll just hold my coffee mug.
I keep dropping this label maker over here. Well, I think today was a pretty great show, in my opinion.
It was good. I think it was good. You know, we still, with these new games, we still have to work them out and the transitions. But thank you to everyone who stayed and watched the whole thing. Again, it's almost like this channel, we got reborn. You know, I saw in chat earlier, I'll answer this really quickly. Someone was asking, can we get a wellness check on Jebb? And you guys know, Jebb used to run this channel. It used to be called Crypto Jebb. And I'm gonna spend a little time here because we've been seeing a lot of questions over the last couple of days. So I wanted to just answer this for you guys. Jebb is alive and Jebb is okay. I actually talked to him the other day. He is doing well. He's still recovering. You know, a lot of you guys know the reason he left had a combination of health issues, family issues, and just really trying to pray through what God had for his next step in life. And he really felt like he was being called away from the show, as well as he thought what was best for his health was to step away. The reason Jebb is not coming back is a combination of those things, but also because he wants this community to succeed, and he knew that where he was in life and the things that God was doing, he was actually getting in the way of this community. He needed to take a step back because this was always bigger than him. This is bigger than all of us. This is about the entire group. So in case you guys are wondering, the reason Jebb is not always coming back, the reason Jebb's not always in chat and stuff, is because we really do want to continue to accomplish this mission that we started out, and he has a lot of things God's doing in his life. He's still recovering. This season for him, and it's not a short season, this is a long season of rest, recovery, and direction, is very, very good for him. As much as it sucks, I know you guys miss him, and I know he misses you guys. It's good for him to have some distance and to create some space so that he can really focus on what he needs to do. The good news is that this is like a start over channel. Like, yes, we have the same mission, vision, but we will never be Jebb. We can't be Jebb. We have to be us. I am Tim. T-Shroom is T-Shroom, Smay is Smay. And I'm so grateful for everybody like you guys who continues to show up day in and day out to watch us, to encourage us, to watch us grow, and make this show something special that's never been seen before. We really do have this thought that we can be the absolute #1 location for people who want not only a diverse opinion being presented, they want well-rounded, not just technical analysis, but fundamental, sentimental, every bit of analysis you can get all comes together in one show, and do it in a way that we can be uplifting and encouraging and not be such Debbie Downers, because a lot of times you see that in the crypto space as well. If that is something that you guys love, if that's a channel that you want to see in this space, make sure that you are subscribed, that you like and comment on all of the content so that we can better serve you guys and become everything that we know that we can be. We love every single one of you guys. That's all we have for you in this show. Make sure to stay tuned. Tomorrow, Kelly will be joining the show. We're going to be talking about on-chain metrics. You guys know we love Kelly Kellum.
We love Kelly Kellum.
That is all we have for you, but we will see you guys tomorrow. Smay, you can go ahead and roll the outro.
Yay!